Let's now start explaining case number B or scenario number B. And this is a totally different scenario. So from the case number A or the first scenario, so don't mix between the two scenarios together, please. Scenario number B, during the process of negotiating the purchase of an additional 30 products, the parties initially agree on a price of $80 or 80 currency unit per product. So the price now of this 30 additional 30 units is $80 per one unit. So the price is different. How much? Remember again, how much was the original price? It was 100. Now the price is 80. So you have a difference here, and this difference is significant. Let's see. However, the customer discovered that the initial 60 product transfer to the customer contained a minor defects that were unique to those delivered products. So this is the very, very important information here. When the company delivered the first batch of the original contract, the 60 units, the customer discovered now that there is a minor defect specifically related to these 60 units. Okay, so there is a minor defect here. And because of these defects, the company promises a partial credit. So the company is going to give a credit to the customer. Because of what? Because of these defects. Related to what? Related to the original products. The company promises a partial credit of $15 per product to compensate the customer for the poor quality of those products. The entity and the customer agree to incorporate the credit, which is 900. So this 900 is what? Is about a $15 credit times 60. So the total will be 900. So the company and the customer agreed to incorporate this $900 into the price that the entity charges for the additional 30 products. Okay, so they agreed together that, Mr. Customer, when you are going to pay for these 30 products, which is additional products, I am going to deduct for you a $900. So this is the meaning of the case. And for that, the contract modification specifies that the price of the additional 30 products is $1,500 or $15. From where this 1,500 comes? Actually, the price of the additional products was 80, and this was 30 units. So 80 times 30 units equal 2,400. And because the company is going to give the customer a $900 credit or reduction of this value, so the final price will be 1,500. So this is the case. But as accountant, you shouldn't follow what the customer and the entity agreed on like this way. And you have to go and analyze the changes and the modifications and determine the correct type of accounting. So maybe your analysis and your accounting differ from the way that the customer and the entity are going both to do the calculations like this way. So you might act in accounting in a different way from this. Let's see. Before start explaining the case and determining how can we do the accounting, let's analyze the case. Do we have additional goods and services? Yes, we do. How many? 30 units. Clear? So the first question here, are these 30 units distinct? Yes, these 30 units are distinct. I'm speaking about the 30 units. How about the price and the consideration? Does this price and the consideration reflect the standalone selling price? Here we need to stop. The original price was 100 and the new price is 80. And this is a big difference, which is a 20% discount. And this 20% discount, most likely, the company gave it to the customer because the customer purchased already a big order from them and he has a good relationship with the company, and maybe the company is going to enhance or emphasize on the long-term relationship with the customer. That's why the company gave the customer a 20% discount. So the price of these 30 units does not reflect the standalone selling price. This is not the same price that the company is selling to other customers. So the company gave the customer a special discount. That's why the price does not reflect the standalone selling price. So the answer for this question is no, and this price does not reflect the standalone selling price. So you have to account for this 30 units as a separate contract, but you have to terminate the remaining quantity of the old contract and initiate a new contract along with the new additional products. So the new contract again will contain the remaining units of the original contract, which is 60 delivered and 60 remaining. So the remaining unit is 60 plus the 30 units that will be delivered under as per the additional products. So the total separate contract that we are going to initiate is 90 units, and we are going to do the accounting very soon for this one. Okay, but let me explain that we have another type of modifications in addition to these additional units. You know that the first batch, which was 60 units, already delivered, and after delivery there were some minor defects, and because of these defects the company gave a discount to the customer, or sorry, give the customer a credit note in order to compensate the customer for this default. How much the credit note? It was a 900. The question here is it a modification? Yes, the credit note consider modification to the price of the original contract. This modification or this credit note, is it related to the whole contract or the first batch? It's related to the first batch. So let's analyze this complication. This additional change that we have, which is the credit note, is it distinct or related to the first batch? No, it is related to the first batch. So in this case, it will be part of the existing product, the existing contract, I mean. Part of the 60 units delivered already. So you need to adjust the revenue of the first 60 units delivered by this credit note. Why? Because actually this credit note is related to defects related to this first 60 unit. So you need to adjust the revenue by this credit note as a reduction of revenue. So here don't mix the 900,000. You shouldn't consider as an adjustment for the additional product and services, which is 30. No, you need to link it to the original contract and specifically to the first batch which was delivered. So how many types of modifications here do we have? We have two types of modifications. The first type of modification is related to credit note, which is related to the first batch. So you have to link this credit note specifically to the first batch and the revenue of the first batch. The second type of modification is related to the additional product and services, which is 30 units. The modification here that we have, or the complexity here that we have in this modification, that the price does not reflect the standalone selling price today, but the customer is given a discount or was given a discount because of the long relationship with the company. So you need to consider this modification as a termination for the old contract, remaining quantity of the old contract, and then you need to initiate a new contract based on the remaining quantity and the new quantity. This is explanation of and the analysis of the types of modification that we have in this case. Now let's do the accounting part by part. Again, the additional quantity that we have, how much it was? 30. This is as per the case. We are just analyzing the case. And how much the price for this one? It is 80. So the total price will be 2,400. But the company collected cash, how much? Before calculating the company collecting how much cash, you need to deduct the 900, which is the credit note that the customer is given. So you are going to deduct the 900, so the remaining cash that the company collected is 1,500. Again, this is the way that the customer agreed with the company. But we shouldn't follow this way, and we have to follow our accounting and analysis for the case that we have just explained. Now let's do the accounting so far. In the first batch, the company determined revenue. How much actually we have determined revenue based on 60 units. So 60 units. This is the first batch. How much it was the price? 100. So the total price here will be what? Will be 6,000. Don't forget that after the delivery, there was a credit note. How much is the credit note? Actually, it was $15 per one unit of these 60 units. So the total credit note is 900. So the revenue for this batch should net to the difference between 6,000 minus 900, which is 5,100. So we have to recognize revenue here only 5,100. Okay. But how much revenue you recognized before? I recognized 6,000. And what was the entry that you did? I recognized the entry based on contract assets and revenue. This was the entry that we did. How much it was? 6,000. And how much it was the revenue? The same value. But now, after recording a credit note, so you need to recognize this 6,000 by the credit note. So we are going to reverse the entry. So this entry we did in the time of the delivery. But after that, we got a credit note, or we gave the customer a credit note. So we need to reverse the entry based on the 900. So we are going to reduce the revenue by 900, and the contract asset will be reduced by the same value in order to reduce the amount that we have to collect from the customer. So the remaining revenue so far, or the net revenue so far, will be 5,100. So again, don't be confused. The first entry here we did at the time of the delivery. So this at the time of the delivery. Sorry. And the second entry here at the time of credit note to the customer. So there is, so far the revenue from the first batch is 5,100. Great. After that, we have additional modification, or another type of modification, which is the 30 units that we agreed with the customer. These 30 units we agreed after delivery of the first batch. How much is the total quantity of the original quantity, original order, 120? How much was the original first batch? It was 60. So how much is the remaining? The remaining will be 60 units. So before delivery of this 60 units, which is remaining, we agreed on another 30 units. So the remaining quantity here is 60 units times $100. This is the original selling price. So the total value of the remaining units is 6,000. Then we agreed on 30 units. How much the price of the 30 units? $80. So the price of this 30 units, the value is 2,500. How much is the total so far? The total is 8,400. Okay. How many units so far? The remaining quantity and the new quantity. The remaining quantity again was 60. This is the remaining quantity. And the new quantity, which is 30. So the total will be 60 plus 30 equal 90 units. This is the total quantity. So you are going to divide the total value, which is 8,400, by the total quantity, that is include both parts, the remaining and the new, in order to reach to average price for each unit of these 90 units. So this will be the price, and this will be the value that you have to do accounting based on in your records, based on the new remaining quantity and new additional units that you agreed with the customer. What did we do here? We did a termination for the old contracts. Let's start understanding this part. We terminated the old contract. The remaining quantity of the old contract is 60 units. The price of this 60 unit is $100. So I terminated. So I'm going to start calculating a new price for the remaining quantity. This is the meaning of you have to terminate the old product, the old contract. So I terminated. Then I have to calculate a new price based on what? Based on the adjustment that we have to do on the new 30 units. So the remaining quantity is 60 and the additional units is 30. That is the meaning of you have to establish a new contract for 90 units. So this is the new contract of the 90 units. This one. This is the new contract of the 90 units. So let's come again. Separate contract by termination of the old contract and the creation of a new contract. So the new contract will be 90 units. And how much is the total value of this 90 unit? It will be 8,400. So 8,400, this is the total value of the 90 units. How much is the value per one unit? divide 8,800 by 90 equal $93. Very great. Now let's do the accounting. How many units you delivered from the additional units and services or product and services? According to the case, we only delivered 10 units of the additional 30. So you have to recognize revenue for these 10 units. But the revenue will be based on which price? You have to calculate your revenue based on $10 times the $93. So this will be the revenue that you are going to record in your books. And how much will be the contract assets will be the same value. Okay? Now, some people will be confused. Are we going to issue invoice to the customer by 933? The answer is no. You have to issue your invoices based on your agreement with the customer. Based on your agreement with the customer. And you have to calculate the differences in your books as being a contract asset or a contract liability. But at the end of the day, this value, which is 933, this will be the revenue of the 10 units that you delivered.